Here we go. MicroStrategy True North episode 15. Here we go. We are back and we are ready to talk about a bunch of stuff. MicroStrategy related. We're going to get into it. We're going to hit the battlefront that we have on the horizon. We're going to talk about conversion of the convertible debt and leverage. We're going to talk about this new strike offering, talk about volatility, and we'll maybe get into some additional topics because there are so many things going on. Once again, in the last 7 days, just a ton of things hitting the fan and plenty of stuff to talk about. So thank you everybody for being here. This is our first day on our official dedicated MSTR True North YouTube channel. It looks like some people had some trouble finding the YouTube channel, so hopefully people will be able to find it. We will retweet it within our X channels as well, so people can take a peek on that. So please like and subscribe. All future episodes of MSTR True North will be on the new YouTube channel. Thank you to everybody that's coming back. So for anybody that may be new here, MSTR True North is a group of people that get together every Wednesday. They've been in the MicroStrategy trade for a really long time. They've got a vested interest in thinking about what's going on with the MicroStrategy trade, all of the news, everything that's happening on the horizon, and all the new products that MicroStrategy is offering. So this is a group of people. We would have gotten together and had this call regardless, but we chose to have this call and broadcast it widely so everybody can join and hear the things that we're talking about. So thank you to everybody, and over to Tim for Not Financial Advice. He's frozen. We lost him. Okay, no Tim.
I'll do
Evening,
it.
everybody.
Oh, there he is.
What you're about to hear. Am I frozen?
No, you're just a lag. You're
Not
good.
anymore. You're good now.
Okay, everything you are about to hear may be really interesting, and it may be fun, and it may be entertaining, and we might talk about some crazy shit. We might do moon math. We might talk about bear cases. Everything we talk about, none of this is financial advice. We like to talk about what's going on, that there's so many things going on with this trade. So we want to make sure that everybody's up to date and has as much information as we possibly can, because all of this stuff is moving quickly and it's relatively complicated.
So maybe now people stop trying to raise money for me to
Jeff.
turn lights on in my house, and instead they can try to get Tim off dial-up internet.
Tim's on dial-up. We've got Mason's still in college. He's got his chalkboard behind him. At least Adrian's dialed in. He's got some, green lights because we've got a positive day on MicroStrategy, and we are cooking. So
I'm here for Preferred Equity 101, taught by Professor Ben Workman.
And we're gonna get a whiteboard, and we're gonna walk through some stuff. Yeah, it's gonna be great. So a couple quick updates on MicroStrategy. Stock price as of today, $341. Bitcoin price, it's $104,400. US ranking. So MicroStrategy is ranked the 110th largest publicly traded equity, and it was back in the top 10 of daily traded volume. So it's up there with top 10 publicly traded equities in terms of total volume. So these are really big, important statistics. Okay, so getting into agenda topic number one, the battlefront, and this is a concept that I just realized over the last day or two. As MicroStrategy has been deleveraging their balance sheet materially over the past couple of months, a lot of the bearish noise and the bearish sentiment has, I won't say disappeared, but it's actually reduced significantly than compared to where it was in November. So MicroStrategy has continued to delever the balance sheet. They're looking incredibly strong. They've got 471,000 Bitcoin held on balance sheet, and they've got $6.5 billion of debt. And maybe it makes sense to pull up my leverage sheet just as a comparison. So if you could see here, as of January 29th, 2025, you've got 471,000 Bitcoin held on balance sheet, Bitcoin price of 104,400. The assets held on balance sheet are $49 billion in assets. The total liabilities are $6.52 billion, given that $1 billion of convertible debt is going to be converting over to equity. And what else we have? So liability to asset ratio compared to just 7 days ago, the liability to asset ratio has dropped from 16.1% down to 13.3%. And in order for the assets that MicroStrategy holds to fall below the value of the debt on the balance sheet, the price of Bitcoin would need to go down to $13,840. Again, this is just a demonstration of how much the price of Bitcoin can move in order for MicroStrategy to potentially be underwater. That being said, none of the convertible debt is secured. So none of the debt has, there's no EBITDA covenants, there's no profit covenants, there's no margin call. None of that exists. So this would have to happen for an extended period of time for that to potentially become an issue. So the reason I bring that up is because as the balance sheet has been deleveraged, the noise has been reduced. We're hearing much less noise. And the noise is most of retail complaining that Saylor's using the ATM and keeping the price down. Now, what's going to happen on the horizon in Q1, Q2, Q3? We're going to see significant leverage put back onto the balance sheet. And that's going to cause way more noise than we're hearing right now. We're going to hear the number of people that are talking about MicroStrategy being over leveraged is going to increase 5x, 10x, 15x. And there are going to be people, putting money to go the opposite direction of this trade just because they don't feel that it's right. They don't feel it's right, and they haven't done the math, and they don't have the time to do the math or even, do a little bit of research. So the reason I bring that up is because I think this group, the MSTR True North, can be incredibly valuable in effectively weaponizing all of the shareholders to have enough information and knowledge to have these conversations with the bears that are eventually going to come into play, right? We're going to see koala bears, we're going to see gummy bears, we're going to see black bears and brown bears, all different sizes and shapes, and they're going to come in different forms, and the noise is going to get way louder. So prepare yourselves, because as the leverage goes up on the balance sheet, people are going to start freaking out and disagreeing. And there's going to be a huge disagreement on how to value the company. And that's what's in store for 2025. In addition, there's going to be the adoption of FASB fair value accounting. And what will come up is potential inclusion in the S&P 500. Again, this is probably going to be the most controversial topic in all of finance in 2025, is MicroStrategy's addition and inclusion and potentially into the S&P 500. So just be aware, be ready to go to the battlefield. It's going to get crazy. And with that, I think I'll pass it over to the team. Anything else? Anybody else have anything to add on that topic?
Well, I think it's funny that you called it the battlefront, because we're about to find out real quick that none of these bears and none of these other competitors to MicroStrategy know how to fight. It's kind of like when UFC came out and every grandmaster, every fake grandmaster from the McDojos came out and they're like, I'm going to beat everybody up. And then you realize real quick that none of them know how to fight because they've never taken a punch before. And the Gracies just wiped the floor with everybody. And that's what Bitcoin is doing to the world. It's imposing the free market. And the Octagon was like the free market of fighting. And now we're about to find out the free market of finance. And everybody's just going to get punched in the face. You either, put Bitcoin on the balance sheet or you get the crap kicked out of you. That's what's about to happen.
Yeah. Game theory is intensifying. It is going to intensify.
Yeah, I agree with what Soleil said, and the thing about it is the longer this trade goes on, the more the same FUD gets recycled. So we're seeing the same things coming up over and over again. We had a new Ponzi scheme video recently. We have people that are making the over leverage comments. We have people that are just showing that they haven't taken the time to actually look into this thing and really do any legwork whatsoever. So to your point, when things really start to kick off again, we're going to see people, for lack of a better term, lose their shit. Because if the old arguments don't work, they're going to try to find new ones, and the new ones are not going to be anything even remotely close to prepared, because we are not facing people that are actually doing the work. We're facing people that either don't get it, don't like it, or don't want it to succeed. That's what I think the vast majority of the bears are. They don't have a position, and they can't quite wrap their heads around what's being done. So it's going to be both exciting and annoying, I think. I hope I'm fully recovered by the time all this stuff starts to kick off, because I don't want to be dealing with assholes with a cough. So we'll see how this thing goes.
You got punched in the
But
lungs, Adrian.
I did. Yeah, for sure I did.
But Adrian, have you even seen any bears come out with any argument that even makes sense? Really?
In recent months, no.
Okay,
I
I
have
rest my
not.
case.
What one of the
Well,
one
none
of
of
the
them have made sense, but
yeah, they haven't. One of the common themes that I've seen is that, most of the bears can't conceptualize capital markets and the fact that there are other capital pools that can't buy Bitcoin. Like that is one of the underlying assumptions for most of the bearish sentiment is like they can't conceptualize that somebody else may not want access to the volatility, the upside and the downside of Bitcoin, and they need to access it via different vehicles, or because they've got mandates or regulations or rules or infrastructure, or right. Like, I mean, most a traditional, let's just say like a 40-year-old traditional investment manager for an insurance company, if he went to his board and said, I want to buy Bitcoin, he's going to get laughed out of the room and maybe fired. Right? Like, it's just not going to happen. So you have to stick within the framework of, what you can work with. And there are starting to become other alternative assets that have different risk return metrics to get this proxy exposure to manage, your downside.
The best part of that is we're probably only 12 months away from them going into the boardroom and asking, why didn't you get into Bitcoin? And then them getting fired for that side of it. So
Yep.
we're turning that corner where pretty soon you're going to have to start answering that question. And I think a lot of them are going to be unprepared and maybe getting ready for retirement by the time that comes, I guess, to avoid those questions. But it's going to be a conversation one way or another. Yeah. I mean, if all the shareholders start pushing for it, and we're already starting to see that, right, with all these shareholder votes starting to come up and shareholders starting to become more activists out there with the stocks that they're in, it's almost an unavoidable topic for them to at least start discussing internally. So it's going to be interesting to see.
Yeah, I mean, the Czech government is talking about adding 5% of their assets into Bitcoin, and then all of a sudden, a couple of those news articles percolate to the top, and it's, why aren't we doing this? Why haven't we been doing this? What's the deal? Who's doing it? How do you do it? And every Bitcoiner, probably watching this stream right now will get approached by a company that needs help on how to do this stuff.
See, the beauty though is they can make all that noise go away. All they need to do, even if all they did was say that they put 5% of their cash reserves in Bitcoin, we'd leave them alone for a while. There's plenty of other people stuck on zero. So it's easy noise to get rid of, Don't make your organization the target of this.
Yeah.
Jeff,
Well, go ahead, Mason.
Yeah, real quick comment. I was listening to your recent pod with Marty Ben, and it was either you or Marty who made the comment that people hate MicroStrategy because of its simplicity. Right?
Yeah.
You can't just buy more Bitcoin, right? Not that MicroStrategy is not a complicated thing. Sure, the logistics and mechanisms of it are extremely complicated, and we're going to get into that tonight. But the simplicity of just buying more Bitcoin is, in my mind, ultimately what pisses people off, because they don't have the framing of understanding Bitcoin. But that's why I love it. It's the simplicity of, let's just buy more Bitcoin. What beats Bitcoin? More Bitcoin, right? And Saylor has said that.
Yeah. I don't need to buy a piece of commercial real estate, or I'm not worried about cash flow. It's outperforming any other asset I could possibly dump this thing into. So, and it's got zero drag, and the economy is being built on this new technology. Yeah, it's blowing people's minds for sure, and it is just incredibly simple. Absolutely.
Well, the market's going to start recognizing that you've really got two different categories under the Bitcoin treasury companies, right? One of those categories is going to be the easiest one for these guys to adopt, which is just get rid of your cash, buy Bitcoin, at least a portion of your cash, buy Bitcoin. That might be all your strategy is, right? You're just implementing Bitcoin as a treasury asset for your company. the one that people are always going to have a really hard time with, and the reason why I keep saying I don't think we're going to see probably more than 20 MicroStrategies show up out there, is because engineering your equity to essentially become your company's product is a whole different concept to focus on, because it's not really an income statement concept, right? You're using the markets, you're creating a product for trading in the markets, and that drives value to your organization. And it's that financial engineering component that I think people are really struggling with, right? They understand that Bitcoin's volatile, but I don't think that they can necessarily explain why Bitcoin's volatile. And then they know that there's value in equities that move a lot and have volatility. So there's one, you inject that volatility of Bitcoin just by buying it, right? It makes your balance sheet more sensitive to the volatility movements of Bitcoin. And the higher a percentage of your balance sheet that Bitcoin comprises of, or that your balance sheet's comprised of Bitcoin, the higher that percentage is on your balance sheet, the more sensitive the value of your balance sheet is to the movements of Bitcoin. So that kind of creates that initial injection of volatility into the valuation of your organization. Then you go and apply leverage to that.
Yeah.
Right.
Crank it
and
up.
now you start turning up the dial. And the beauty with Bitcoin is it's how all markets work, right? When you've got an asset that's got a free floating value, it really becomes a function of both sides of the argument, right? It's why I've recently been saying, I'm not even necessarily hoping that people just come around on Bitcoin or on MicroStrategy, because you want the range of valuations in people's minds to be 0 and 30 million or whatever the number is, right? So that you're going to get that volatility, because you're looking for those turning points where more people start changing their mind about what the fair value of it is. And it's going to keep those swings and that volatility going. Then when you've got an organization that's using an asset nobody can actually agree on the value of, and they're leveraging up against it, now you really don't know what the value is of that equity, right? So that thing's going to swing like crazy. And then you get a MicroStrategy. And then when they keep changing the strategy, so right when everyone starts wrapping their minds around what's going on, right? It was very simple at first. We thought it was simple. I mean, it's kept us all talking for a really long time. You know, it was simple in the sense that there were only so many products that they were using, right? First, you just use your cash. Then they went down and tried the traditional debt route. They figured out that that's got all kinds of strings associated with it. So that's probably not the best route to go, because you don't want handcuffs on while you're doing the strategy. Then they got into the bond market, and everyone started coming to terms with the bond market, figuring out who those buyers were. They said, yeah, it's cool, but the convertible bond market's only a very small part of the bond market. And now they're expanding into more broad fixed income. And now people are going to have to wrap their heads around that, me included, and try to figure out, why are people buying these? You know, what's the actual use case within the corporation? Why would they be issuing preferred stock now? Like, people are going to have to get a full education on what preferred stock even is. And so that lack of understanding causes such a gap in what the valuation is in people's minds, that you're going to constantly get these big swings. And the more Bitcoin that they own, and the higher that percentage and the higher that additional leverage is, the wider the range of the swings are going to be. But that intrinsic value floor is continuing to climb, right? So the peaks keep getting higher, the lows keep getting higher, right? And it just keeps moving up and up and up.
Yeah.
So
You get the amplitude.
and it goes in cycles, right? I mean, valuations don't correct overnight to what people think they're going to be, right? We're going to constantly be in a state where everyone think it's way overvalued, and then it's going to go, and people are going to think it's way undervalued, and it's going to keep doing those swings. So people wrap their heads around it a little more, but as soon as they do, then the strategy will change, right? Or a new entrant to the market will come, and now you got this whole Semler thing people got to figure out, like, what the heck is this? Now they're buying call options on themselves. Like, how's that work? So it's going to be very interesting.
Yeah. It's chaos, right? I mean, it's structured and designed chaos, which is why I mean, Ben, when we were talking about this on Monday, it kind of, light bulb for me. Oh my God, this is going to be a battlefront, right? It's going to be a constant battlefront of like, bulls are right, bulls are right, bulls are right. Bears have more power. Bears have more power. Bulls are right, bulls are right. It's just like, it's going to be back and forth on who's right on valuation. And the narrative in 2024 has been largely fixed on MNAV. And now you're going to introduce a new one with PE, and you're introducing a new product with preferred stock. all of a sudden, like all your models are broken. Like, how do you do it? Who's pricing what? How do you value what? Like, where does it go? Who's buying what? When are they buying what? And you know, but before you kind of went there, Tesla just announced 26% of their of their earnings from Q1, or I guess this Q4 was from Bitcoin. That's going to cause some light bulbs to, you know, go off from people that are watching what's going on here. So, and it just makes it harder to value Tesla, right? Like, is that earnings? Like, is Bitcoin, is Tesla's $600 million gain? Is that, like, how does the market treat that $600 million gain of that Bitcoin? Is it treated like all of the other earnings? If so, then you have some framework to treat MicroStrategy's Bitcoin the same. And MicroStrategy has what, 47 times the amount of Bitcoin that Tesla has?
Think about it from an algorithm perspective, though, right? All these data aggregators are just going to use what the earnings were. They're not going to be able to go in and back out what of it came from fair market value change in Bitcoin, right? They'll probably try to do that more on MicroStrategy because it's going to be, you know, like all the earnings. But when you start getting that blended return in with all these more traditional organizations, it's going to be a mess because it's going to throw all those PE ratios way off, and they're either going to have to spend time finding ways to get standardized breakout reporting for these types of earnings, or it's going to get lumped in and it's going to become a part of that PE metric. And so if you're an organization that does have substantial earnings, now you might want to look at it too, because you can juice your earnings with additional returns.
Right.
Well, we've always talked about Mag 7 adopting Bitcoin. We keep forgetting that we do have a Mag 7 company that has adopted Bitcoin, right?
Yeah.
So with regards to that, given the reaction I've seen on the timeline with everyone saying, "Oh, Tesla has hit this huge Bitcoin gain," does this make Bitcoin more attractive for one, Tesla to add more Bitcoin to their balance sheet just for that very, very purpose? And two, to what your point, Jeff, when the market starts seeing this and they start trying to figure out, is this earnings or is this a different type of earnings, or how do we mark this and how do we value this? I think that does nothing but benefit MicroStrategy, even if they try to say that MicroStrategy's earnings are only Bitcoin, therefore it shouldn't be valued as such. Because I know that's one of the arguments that I'm seeing popping up. It's not earnings, it's just valuation of the balance sheet, so we shouldn't really see it as earnings. But with a company like Tesla that has, you know, a robust suite of products, the plain benefit is just straight up number go up. It's a huge gain, right? Why would a corporation see that and say, "Oh no, we don't want a $600 million gain"? We don't want to do that. I think Tesla, ironically, even though they haven't been as vocal as they were with regards to, or let's be real, Elon hasn't been as vocal as he was in years past with Bitcoin. I think it makes it more and more attractive. So does this open the door again for more Mag 7 adoption? I think the door has largely, you know, closed on that. But could it be something that they put on the balance sheet just because? Well, why not? It's a gain. It's something that's going to gain and appreciate over time. It's something that's going to give us a easy way to have an appreciating asset. What does it hurt to throw a few billion on the balance sheet if you're a NVIDIA, Microsoft, Meta, and just say, "All right, set it and forget it. We'll watch how it appreciates over the next, you know, 2, 5, 10 years and see what it does."
So I've got one point to add on to that. And it's because we're talking about, we'll get to MicroStrategy. I promise everybody, we're going to get to Strike. We're going to get to this preferred stock. But on this topic, this is super applicable to MicroStrategy, Bitcoin adoption, the SAB 121, or the repeal of SAB 121, and the new, bulletin where banks can custody Bitcoin. And Adrian, to this point, I want to hit on this, right? So Tesla has $33 billion of cash on hand, right? So on that $33 billion, they probably hold it at a bank. Let's just say like Wells Fargo. Now, Tesla also holds $1 billion of Bitcoin. Okay, so now if they have Wells Fargo hold that $1 billion of Bitcoin, Wells Fargo is now holding $34 billion of Tesla's assets. So previously, Tesla would only be able to get a line of credit on that $33 billion of cash. And now they could get a line of credit on $34 billion of cash. because the bank is holding that cash. So it provides additional lending capability once banks start holding these assets for corporations in this potential way. There's structured creative finance that's going to happen behind the scenes. Nobody's going to know about it, right? Like this isn't going to be announced to anybody, but this is going to happen behind the scenes where these corporations are going to be able to increase their ability to lend on the balances that they hold because of them also holding these alternative assets that are custodied at those houses as well. At those houses as well. So it's a really big deal, and I think it's getting totally underplayed, and nobody really understands it, and nobody will see it happen. It'll just be behind the scenes corporately.
Well, so to your point with that, let's take it to the individual level. Let's say a guy has, it's 5 years from now, and a guy has I don't know, 5 Bitcoin. He can walk into a bank, excuse me, and he can get a loan against it, right? Let's forget about what the interest rate will be and all that. That's just adding more liquidity into the banking system. So if you have it happening at the corporate level and you have it happening at the individual level, this is a huge amount of liquidity that can go into the banking system that they're just going to lend out against. Now, if corporations start to get wind of that and see it as an appreciating asset, they can then use in perpetuity and get easy capital against it, right? Because MicroStrategy was the pioneer. 5 to 10 years from now, they're not going to be the pioneer. It's going to be more commonplace. So I think it really is being understated, the Sob 121, and I think it's really being understated just how much room this has to grow.
Yeah.
So it's going to be a very interesting 5 years, I think.
Yeah, hard to ignore.
Does it make anybody else laugh that we regularly say that we're waiting for like one of these Mag 7 companies to buy Bitcoin, yet one has held it for years and we just blow
We
right
forget.
past
We
that
just
still?
go,
forget.
It's like
Tesla.
it's so old news that you're like, well, it's the other 6 we're really looking for here. That just makes me laugh.
To be fair,
Because I say it too. I
Tesla
always
was
just
10. Tesla was 10, and just like recently when they kind of popped up here, back up to the 400 area, they popped into the top 7. So
Yep,
to be
yep.
fair,
it's a good point. Yeah. I like that.
Yeah. Okay.
Devil's in the details. That's true.
Shall we get into preferred stock? We're about 30 minutes in. I think this preferred stock, this might take us an hour diving into this, and we'll just kind of see where it goes. Unless, Tim, do you have anything else to add on that, on any of those topics, the Battlefront or convertible debt or SAB 121?
SAB 122.
122.
That's where we are.
That's all right.
I don't know if what I'm about to say adds to that, but I just think corporates are going to come along, publics, the Mag 7, everything that was just discussed, they're going to come along when 1 of 3 or 2 of 3 or all 3 of these things happen, which is you have more states every day, basically, right? Oklahoma, Kansas, Iowa, Montana, Utah, Wyoming. If they haven't already introduced, they're about to introduce legislation on the state level. And then you'll start seeing, and you saw Texas today or yesterday say, this is a priority. And then you'll start to see them be passed somewhere, right? Probably in multiple states. And then, as David Sachs said today or yesterday on mainstream media, he's like, yeah, well, it's a working group and we're working through that. Cynthia Lummis, obviously, spearheading that committee. And I think the zinger, because we all know Trump needs to have like at least 1, if not 5 things in the news cycle every single day of his life. You're going to see an executive order. This is just my personal opinion, that establishes a reserve and has the alleged legal capacity to buy tens of billions of dollars worth of Bitcoin. It's going to be contested. And then it's going to be like, oh, these other countries are coming. We really need to get it through Congress quickly. I think that's going to be the bewilderment, to borrow
speed. Yeah. Everything
So
speeds up.
I think you're going to see, so that's my theory. You're going to see like the states continue to introduce and start to pass. You'll see an executive order, then you'll see it through Congress. And like in the midst of all of that, all of the corporates going to be like, oh, okay, we got to do this. We have to at least do something, to Ben's point.
Right. Yeah, the speed will move fast. Go ahead, Mason.
Yeah, just adding one thing. So the repeal of SAB 121 was the final key in Saylor's three-step part of unlocking a $5 million Bitcoin. And this is something he's been talking about for years. It was FASB fair value accounting, which happened in December, I believe, officially. The ETFs, which happened in January of last year, and then SAB 121. Boom. And to me, that's really, it just takes away all the headache for corporations to, dive right into Bitcoin. They can call their banker and say, buy me, $1 billion of Bitcoin, buy me $100 million of Bitcoin. And the accounting is smoothed out. And the ETFs have made it, politically or institutionally appropriate to do that.
So are you just running around your college with signs like all three have been hit? You're like just trying to tell all the people. I'm sure nobody in your college even knows this is going on, which is probably weird.
No. If I said, FASB or SAB 121, it would be like I was speaking in code or something.
You need to walk into some finance classes and just hit them with some "How about them apples?" and then walk.
Yeah,
out of there.
I'm in a finance class right now. That's where I like to come. I like to come to the economics. I'm not even kidding. Yeah, the economics
you get
wing.
the brain
Yeah.
You're probably still a unicorn in freaking econ class.
I'm sure.
I don't take these econ classes. I have True North. I've been.
Yeah. Perfect.
I'm honored, Mason.
We need Tim. We may need to put Mason a 1v1 v Gladiator to see who's more bullish. Also,
it's all
RIP.
about it's all about the mashups these days. I will mention before we get into
pure
preferreds
entertainment.
Yeah. So I always post the podcast on X, and then I'll do another post where I put the YouTube link. Well, I tagged the wrong profile, like a scam profile for Gladiator. I did it was CF with 2 underscores instead of 1. And I got an email from Gladiator's mom telling me about it.
Oh man! Oh my gosh!
I felt
That's crazy.
so
I wonder-
bad. I was like emailing her back, like I apologize. I didn't know. And I was telling Gladiator, he's like, oh, it's okay. There's a lot of scam accounts out there. So I just thought that was very funny. So the whole
That's crazy.
family is rooting for that guy.
It's crazy that he's banned. I mean, just another shout out for Noster to get on Noster and have some backups, I guess. Honestly, I should probably start posting over there a little bit more often, just to shift some social media exposure. Anyway,
We should also probably mention what Powell said today. Right?
let's save it to the end. We're not.
yeah.
We're gonna get stuck. Let's hit the preferred stock. So if people want to bounce, they can. Because
Why do they get to go to bed? We don't get to go
Yeah.
to bed.
that's true.
No, screw that.
Jeff's
Hold them
over here
hostage
running
to the
us on
end.
West Coast
All right,
hours. You guys all think Jeff's a nice guy, but he's running a hard bargain over here on all of us East Coast guys.
Jesus.
Yeah,
Okay,
he keeps me up late and then goes and eats ice cream. It's freaking
this,
bullshit.
this is true.
Yeah, it tells us he has to leave to go to bed while it's 1 a.m. our time.
It's true. I do go eat ice cream after these streams. It is the best. Do you guys want to touch on it? Do you want to touch on the Fed? I feel like I could talk on this for a little while, but
We can
No,
save
you
it till
made
the
it
end. I
awkward
mean,
now, Jeff.
the only thing
now it's awkward. Now it's awkward. Preferred stock. Let's talk about Strike. Okay, Strike preferred stock offering. And Ben, in true Ben fashion, he is feeling healthy. He is back. He put together a massive long post about the preferred stock. I'm going to pull it up. It might make sense to just pull it up and walk through some of it. Oh, wait, that's me. And we'll kind of start with that and see how it goes. I think so. The preferred stock is a new structured financial offering that is being offered to the financial markets. It has been going through the process of being priced, and they're getting an understanding of how much capital is going to come in the door on the preferred stock offering. We should have a final figure by close of business tomorrow. So January 30th at close of business, we should have an understanding of the pricing of the preferred stock, how much capital's come in the door, who's potentially buying some of this stuff, and what the final terms of the preferred stock may look like. Ultimately, what the preferred stock is aiming to do is provide another form of proxy Bitcoin exposure that has less upside to Bitcoin and less downside to Bitcoin. So it's actually in this presentation here on slide 20. So this is Saylor and MicroStrategy put together a presentation. It's 20 minutes long, and there's a slide deck that goes along with it. So you can watch that to get some perspective of what Strike is and what it's meant to do. But ultimately, in this presentation on the screen you can see right now, MicroStrategy ARR is the green line, IBIT or Bitcoin ARR is the blue line, and then the Strike ARR is the yellow line. So what it aims to do over time is have less volatility to the upside and less volatility to the downside, while still giving you that proxy directional exposure to Bitcoin. That's the initial design and what it aims to do. And from here, I'm going to kick it over to Ben, and we can talk about the structure. We can talk about the design, the dividend payment, the optionality, the maturity date, who's potentially buying them, and we'll go from there. So Ben, I'll kick it over to you. Everybody else, feel free to interrupt at any point, and I'll kind of keep watching the chat too if people got questions, and we could just rip this thing apart.
Yeah, for sure. Yeah, so people jump in too, because I do want to hear what everyone else has been thinking about this as well, because sometimes I'm off here in my my own little worlds ranting on Twitter. So, but I was going to say, just for people watching, because I've gotten a lot of questions, for people that have been trying to get into the preferred stock on Fidelity, it's giving everybody an error saying that you've got to have a $500,000 brokerage account or something like that. That's not true. So if you call Fidelity, they'll override that. MicroStrategy is aware of it too, and they were trying to get Fidelity to remove it because it's not a requirement. The requirement is you've got to purchase it basically in lots of $25,000. So there's a minimum there to be able to participate, but that $500,000 error that you're seeing, if you're trying to get into it, that is not applicable. So if you did want to get in, you just have to call and they'll override that. So just for everyone's knowledge, because I know that's been a question out there as people have been watching it.
So to that point, Ben, it is available to retail investors. Like, whereas the convertible debt, right? The convertible debt was primarily available to, these were private placements. These were done behind the scenes. They were unrated private placements. In this circumstance, retail can have access to this to Strike, but so can ETFs and BlackRock and Vanguard, all these companies that have preferred ETF funds, and family offices, anybody that's looking, insurance companies, anybody that's looking for this directional type exposure.
Yeah. So it's a true initial public offering, right?
IPO,
and
Yep.
That's very unique in that it's not necessarily just targeting one specific buyer group. It's open to anybody who wants it. And so it's going to be really interesting to see what that demand looks like. I think a lot of people were initially confused when they saw the $250 million offering, because originally it had been messaged as potentially a $2 billion offering. And the one thing to keep in mind is that this is the very first time that they're bringing this product out to the market. And so you're always going to want to sense what the demand is out there and get a sense for how many people are trying to participate, where that investment capital is coming from, right? Who are the buyers that are showing up for this product? And I think they're going to get a pretty good sense of it this week. And obviously they'd talk to several investors before they got this out the door anyway. So when you're working on the structure, right, they're not doing this without input from people that would potentially be investing in this product. So there is demand. We're going to find out how much. So I won't be surprised to see that $250 million number be quite a bit higher here by the end of the week, but obviously nobody knows. So we'll see what the interest looks like for that. So it's a $250 million offering. The pricing on the offering is $100 a share. It's called the liquidation value. So new term that we all get to learn, but so the liquidation value on those shares is $100. So there's 2.5 million shares that are going to be getting issued out into the market if the offering stays as is. The conversion of those into common stock, which is what made it confusing for a lot of people to find out, where does this rank in terms of a premium? What premium are they collecting above and beyond the common stock? It's 1/10 of a share per share of preferred. So when you're trying to figure out what premium are they collecting capital at with this offering, you basically just have to walk down through the math, starting at, you got 250 million shares or $250 million. And then you got to figure out how many common shares does that equate to based on that 1/10 of a common share conversion. So essentially it's just the number of shares divided by 10, right? So 250,000 shares are what's attributed to this initial offering if you were converting it to common stock. So that basically puts it at $1,000 a share in common stock terms is what that strike price is. So when you're looking at premium, that's just under a 200% premium. So massive premium. Keep in mind that the biggest premium that we saw with the convertible stock was 55%. Right. So this at face value initially is massively accretive, right? Just from the initial transaction, it's massively accretive.
Pause there.
Now,
Pause there.
pause.
Pause there. Okay. So the convertible debt had a conversion premium of 50%. So that effectively meant that, so let's just keep the math simple. Let's say the price of MicroStrategy is $100. They're effectively bringing dollars in the door as if the price of MicroStrategy were worth $150, right? From a dilution standpoint, and they're able to use that capital to buy Bitcoin. Now the preferred stock, let's again use $100. You're effectively now bringing in dollars in the door at what, like $1,000? $1,000. So it's significantly more accretive to Bitcoin per share for the entirety of the common shareholder. So I think one other thing that's important to think about the landscape here. So right, you've got if for whatever reason, oh, that's me. If for whatever reason MicroStrategy went bankrupt, right? There's levels of who gets access to the assets first. And this is important when you're thinking about the structure and design of all of these products, right? So convertible debt is senior. So the debt is senior to all of the other, structured financial products that have ownership rights in MicroStrategy. The debt is senior, the preferred stock is second, and the common stock equity is last. Basically, the common stock, the equity holder, is always last in any bankruptcy proceeding. So if there was a company that went bankrupt, like all of the debt gets paid out first, all of the loans get paid out, all of the preferred stock gets paid out, and then anything that's left over goes to the equity shareholders. So equity carries the most risk, which is where you get the most return, right? It carries the most risk, you get the most potential return because you're taking on like the entirety of the credit risk, the excess credit risk of the company. In this scenario, the preferred stock, it doesn't have voting rights, but they are preferred relative to the common stock. So if there were a bankruptcy proceeding for whatever reason, preferred shares would get access to those assets. Back over to you, Ben.
Yep. Yeah, and that's a really important point because some people always wonder, why would anybody buy these preferreds? For some investors, that's why. It's because you're moving higher up that table in terms of preference. So it lowers your risk profile on that asset. So it's a very intriguing asset for a lot of reasons, but you don't see a lot of preferred offerings, right? These aren't nearly as common as you see with other fixed income offerings. So now
this is going to be a 4-hour call because I've already got questions.
Yeah.
So because it's even better. Well, if I understood it the way that Jeff Park explained his little one pager, which I gotta say was nowhere near the size of your post, Ben.
Well, I don't know. I think he cheated
kind of
because I think he made it
inadequate.
small font and then he put it in
Yeah.
image, like
That's
he's
true.
cheating. And I did
did
say I
cheat.
was going to
Both
update
wrong.
my
Both
professional
wrong,
bio to say that I wrote the foreword for Jeff Park's one pager. So,
That's nice.
I'm still not convinced Jeff Park isn't a computer.
Yeah.
He might be a computer.
Might be.
I've even met the guy in person. He might be a computer.
Still might be.
He's an AI from the future.
He is. I mean, that guy is on another level. Go
Yeah,
ahead,
sent
Troy.
back
Bring
in
it partially
time to give me
update,
homework.
guaranteed.
Yeah, so if I understand it the way that he described it, is even that 10-to-1, so it's the $1,000 call, but that's like a moving target because if if Strike starts trading at 200, now you're not going to even want to make that conversion unless MSTR is over 2,000, because now it's going to be 10 times the current price. So so to get the $100 though, like you have to participate by a certain date, because once it's turned loose, it's just going to trade like anything else, right? And it's going to maybe go up, maybe go down. So like, is there a certain point where you're guaranteed to get the 100, and then if you are too slow to the IPO,
right?
Yep.
IPO's at 100, and then once it's out, this thing's going to trade in the secondary market, and the yield is fixed to the IPO price. And maybe it makes sense to dive into the dividend, because this is an interesting feature.
Yeah. And I think that's one that people are struggling with a little bit, that there's a difference between the dividend versus what people are going to consider the yield, right? There's essentially two separate things. The dividend is fixed at 8% of the liquidation value, and the liquidation value is $100. That doesn't change. So essentially the dividend per share is $8 in perpetuity. Now, when the pricing in the market, when they're trading in the market and the pricing of those shares is changing, the yield that's reported is going to change, right? Because now it's $8 divided by whatever that share price is going to be. So if it dips below the 100, you could see that yield climb higher. And if the price runs well above 100, you'll see it go lower, right? That'll just be the mechanics, but it's a fixed dividend on the liquidation value. So $8 per share in perpetuity. And the dividend has an interesting component to it, which is that it's essentially got two ways to be paid. One is just the normal, you can pay it with cash, right? A cash dividend. The second one is called payment in kind. Now, it's not payment in kind that they're issuing you more preferred stock. Payment in kind here means that they can pay it out in common stock. So you would get Class A common shares as payment for the dividend if they elected to do it that way. The reality is that they're going to most likely pay these in cash, and they're going to keep the flexibility for when they decide to execute the ATM. And we'll get to why that's important here in just a minute. But in terms of the dividend structure, I think that if you just keep that in mind, that it's $8 per share, right? Then that'll keep it straight in your mind. It's not going to float with the price. It's not going to change with the price. It's just fixed at 8% of the liquidation value. Now, the part of all this that really, I think, escaped a lot of people initially was when Saylor made the comment in that video about how they could issue this preferred stock at the market. And it means exactly what everybody thinks it means. And I think for a lot of people, it probably, sent shooting pains down their spines as they started hearing, oh my gosh, there's going to be another ATM. And they're right. There probably will be. It won't be right away, because the preferred stock's going to have to trade for a while. You have to hit certain volume targets before you can go and file an S3 and get an ATM against a new share class. So it'll probably take a little bit before we see an S3 and them opening an ATM. But what you're going to see is essentially, and this is what I think you're going to see, is essentially an evolution in the way that they use ATMs. And what that's going to mean is that if you can raise at the market money at, well, it could be higher than the $100 a share that they're going to IPO at, because they're going to sell it at whatever the market value of the preferred stock is. But if you can do it at a conversion that's essentially a 200% conversion, now you can use that accretive ATM to raise all your capital, right? So you're raising capital at more accretive prices today, and then you keep the other ATM open so that you can use it to raise the capital to pay the dividend. So now you've got two ATMs open at the same time that are basically complementary to one another. One of them allows them to constantly be raising capital for massively accretive purchases of Bitcoin, issuing no new common stock at that time, right? They're issuing the preferred shares. It does increase the dividends that they have to pay, but then they use the other one essentially to fund that cash flow need to pay the dividend if they need to, right? And I say if they need to, because depending on the size of this offering, if you look at this initial one where it was 250 million, well, an 8% dividend is $20 million a year. So to put that in perspective, that's the equivalent of them essentially turning the ATM on for 2 minutes. That's how much ATM usage it is to fund 20 million. Now, they also have cash flow that should support that out of the gate anyway, so they probably wouldn't even have to use the ATM initially. But it's just important to note that there's probably that relationship between the two ATMs. That means in the future, you're not going to see the constant hammering of the common stock via the ATM. What you'll probably see more is the raising of capital through the much more accretive preferred stock class, and then they'll just use the common to fund the dividends, the dividend payments for it.
Okay, we're gonna have to go through this a couple of times because there's like 15 topics there, which again, I'm just gonna try to simplify this a little bit. One other point I think that we haven't really hit is that this preferred stock is a perpetual preferred stock. So that dividend is effectively being paid in perpetuity until you convert it into common stock, if you want to convert it into common stock. And MicroStrategy is the only one that has the ability to convert. Or wait, hold on.
MicroStrategy has no ability to convert.
That's it.
Only the holders of the preferred stock get
Right.
to pick when they convert. The only ways that MicroStrategy can convert any of it is there's really only two clauses. One is if they get down to 25% of the initial issuance value. So that's 62.5 million. So if there's only 62.5 million outstanding, then they can basically go do a cleanup that allows them to go clear
convert
out the rest of the preferred stock and get rid of it. The only other way is if there's some massive tax law change that happens that changes the treatment of preferred stock. And then they get some flexibility to do something. But that's a very unlikely scenario. But in terms of discretionary conversions, there's nothing in these like what we see with the convertible bonds where there's no early redemption triggers, right? There's no 130% clause tied to these. It's just purely perpetual at the discretion of the owners of the preferred stock.
So if the price of Strike goes from $100 to $1,000, the dividend yield when it was first issued was 8%, but you're still only getting paid $8 for the value of the $1,000 stock. And the stock is likely not going to move as volatile or as you're not going to get the same upside potential as holding the equity itself. So at that point in time, it may make more sense to convert because your technical annual yield that you're getting on the equity may be less than 1%. Right? So if the value of the stock is $1,000 and the dividend that you're getting is $8, it's 0.8%. I see there's also a lot of questions in the comments, like comparing Strike to MSTY. Like it's comparing apples and oranges, like they're completely like fundamentally different products. And I would really urge people to not compare them. Like they're so different. They're not even the same playing field. Owning preferred shares in a company with less volatility and an 8% fixed annual dividend is way different than a covered call, directionally long ETF that is aiming to get 120% distribution yield per year. So those are so fundamentally different. And if you've got a stack of, again, none of this is financial advice, but if you've got a stack of money and you're considering the two, like they're very different, very, very different products. So they're like,
but we got to put a plug out there that our guy Soleil is in a battle with MSTY. Yeah. So if you want to watch somebody battle out and see if they can generate higher returns, we've got our resident covered call expert here who has locked himself in the cage with MSTY, and he's going to be trying to beat them here over the next several months. So if you want to tune into that show, make sure you're following Soleil so that you can watch him as he dominates MSTY over the next couple of months.
Yeah. I got to say they drew first blood. I was levered up pretty good, and then we tanked like 10% on the price. So
we love an underdog.
In the balls
story.
Right about now.
Yeah. Underdogs.
But I got to do it like professional wrestling style. You know what I'm saying? I got to let them get me on the ropes, and then I just come back. And
that's right. Then you got to bob and weave your way back here.
I love it. I love it. Okay, so what else do we want to talk about here with this with perpetual? Oh, another question was who's buying this stuff, and within this presentation from Saylor, which I will kind of go back to here, and you can see stock market comparisons. So this list is it's funny because he's in this like his
I was gonna say, you could tell
his
he's in that
classics
mid.
guy. He's like,
A sigh.
but the tickers PFF, PGX, these are preferred stock ETFs. So these are the net assets associated with the preferred stock ETFs over here on the left hand side. So you can see PFF is actually owned by BlackRock. That is a BlackRock preferred stock ETF, and it's the largest preferred stock ETF. Their annual return is 8%. They've got a dividend yield of 6%. Volatility is pretty low, but these are who the buyers are. It's these companies like BlackRock and Vanguard, and they're putting together ETFs that are gathering all of these different types of assets and creating an ETF and providing these ETFs to again, insurance companies, pension funds, banks that are looking for diversified risk return metrics. Again, all of this is about matching risk to liabilities. It's different risk return metrics fit and create a different constructed portfolio. So the companies that are buying these tickers, it's generally not retail, I don't think, that are buying. Maybe some retirees buy preferred stock ETFs for the cash flow. They get a dividend yield, those kind of things. But so that's who's potentially buying some of this stuff. Back over to you, Ben.
Yeah, and that's one group of who's probably buying some of this stuff, right? Because you're probably going to get a lot of other type of institutional buyers. Endowments would be a buyer of these. Insurance companies would be buyers of these. But then I do think you're actually probably, if you were going to see one that got retail interest, this is probably it.
It's probably one.
Because it's a unique preferred offering compared to all the other ones. Yeah, I've had a lot of people asking me, will I buy STRK? And my initial response was, I'm a high voltage player, right? I like the highest of the high volatility I can get into, not the 2x levered ETFs. Those are just silly. But, like I'll do the options and that kind of stuff that I can control more. But then I started thinking like, well, what about in like my HSA accounts and things like that? I was like, I might consider it there just because of the unique properties and because I do like to keep an eye on these products, right? I always said if I could just buy a few of the convertible bond offerings, I probably would, just to, participate and see, be a part of actually owning it. But, if I was going to look at one, this would probably be it. I haven't yet decided if I will or not, but there's certain accounts that I looked at where I thought maybe it would make sense to have an allocation in some of those types of accounts that I'm not really trying to trade anything in and out of, where I don't necessarily want the same levels of volatility that I've got in all of my other accounts. And for that, I might consider it. So we'll see. I don't know. But this is the only one that would probably be intriguing to me to own for many reasons, including that we pay so much attention to it. But all right. What else do we need to cover on the preferreds here?
I wanted to hit the dividend being paid in cash, because something that's going to come up, and I guarantee this is going to be the bear, over leveraged. They don't have the cash to buy, they don't have the cash to pay the dividend, and the, super over leveraged. So I did some math, and I put it over here on Excel so we could go look at this. So what I tried to indicate here, so if the strike offering, we'll get everybody in here. If the strike offering is $250 million and the fixed yield is 8%, the fixed annual yield payable is $20 million on the $250 million initial offering. So in Q4 alone, MicroStrategy raised $17.9 billion on the ATM in Q4 alone. It's actually in 2 months, because it was from October 30th to the end of the year. So in 60 days, they raised $17.9 billion of capital. So if you were to reflect the amount of ATM that needed to be used relative to the, the dividend, the amount of ATM that would need to be used to pay the dividend would only represent 0.11% of the ATM capital that was raised in Q4. Okay, now let's crank it up, right? Let's just say MicroStrategy issues $1 billion of this preferred stock. You're looking at $80 million. This still represents less than 0.5%. So if you had 4 times the amount of interest in this preferred stock, that would still be less than 0.5% of the capital raised in 60 days in Q4 using the ATM. Okay, let's take this even further, right? Like, what if MicroStrategy raises 32 times the initial offering and raises $8 billion of capital? That's a $640 million dividend. Again, they raised $17.9 billion in 60 days in Q4. That only represents 3.58% of the ATM usage in a single quarter. So there's a lot going on here. There's a lot of interest in this capital. And I think that the purpose of putting this together is that it's a very small portion. It's a very small number a very small relative number of capital that would need to be raised in order to raise the cash to pay the dividend in the preferred stock. And that's just one way they could pay the dividend. They could also pay the dividend in additional MSTR stock. And I think we need to hit on that point one more time. They can issue the dividend in kind in MicroStrategy stock. Does that hurt anybody's brain? Mason, is it clicking? Are you going to go run around and tell everybody at your school, like, here's how preferred stock works? What do we think?
Yeah, I'm going to have to keep this one to myself.
What's interesting is the math that you end up doing ultimately on this is you go, okay, at what point, if they're using these 2 ATM facilities as complementary facilities to one another, right? If you just assume that they've got to fund 100% of this dividend out of the common stock ATM and they're raising all the capital with the preferred, what you're doing then is you're basically trying to figure out where would the break even be on that? Where would it be just equally dilutive to common stock for them if they were using it? So that was the math that I started doing in that post, where I was looking at, all right, for different share scenarios, the beauty of it is that the money that they're raising now, if they're using the preferred ATM, but raising the capital for the dividend from the common stock ATM, is they're raising that capital at future values, right? So the common stock, to fund that dividend, it's an annual dividend. So they're only taking the annual amount in year 1, and then in year 2, and then in year 3. So they've got the benefit of any potential share growth that happens over the next several years, which drastically lowers the number of common stock shares that they would need to issue to raise the capital to pay that dividend. And so when I started modeling it out, and that was where I was looking at, how many years would it take if the share price didn't move at all? And I think it was 8 years before they would be break even with, if instead they had just used the Class A ATM. And then if it got 5%, I think it went out to something like 14 years or 15 years, and then 10% bumped it out even further. And then by the time it was 52 or 15%, I modeled it out until I was 100, and they were still nowhere close. And I figured by the time I'm 100, it's someone else's problem to figure out what's going on. So, but it shows you that the returns can make a massive difference on how accretive this can be over the long run, because you're deferring off that capital raise to fund the dividends out into future years. So if this strategy continues to be successful, and if you don't think that Bitcoin is done growing now, if we get a couple of years here with really explosive growth like we've seen recently, it becomes so slanted to being the most accretive thing that MicroStrategy can possibly do to buy Bitcoin with, that I think there's a shot that it actually becomes one of the preferred vehicles, no pun intended, to actually raise capital to buy Bitcoin with, because it would be far more accretive than even a 0%, 100% premium convert, which is probably the best you could possibly hope for out of the convertible bonds. So it gets really interesting in the math if you start to factor in any level of decent performance on MicroStrategy stock out into the future in terms of how accretive and how much of that value they just ultimately get to retain forever. That's well beyond anything they can do with any of the other products that they're offering today.
Yeah.
So if you're an ATM hater, if you just are so disenfranchised by the fact that they were using the ATM for the last couple of quarters, like this should be an absolute home run in your mind, because it gives them an off ramp from that. They won't have to do that anymore, because
Yeah.
now they've got this new preferred vehicle. They can raise the money far more accretive. You know, Soleil
Way.
alluded to what Jeff Park was saying, where even when it goes past the strike, they still might not be incentivized to convert it, right? So that those common shares aren't coming out. And it becomes this really intriguing value proposition over the long run, where I think this could potentially become the primary vehicle used for the foreseeable future once they really get this thing rolling. It'll take time to get to the scale that they're used to, but it looks pretty good.
Yeah.
Yeah, Jeff Park went so far as to say that he envisioned a potential new 60-40 portfolio,
Yep.
60% strike and 40% Bitcoin, and just let that be wealth preservation for decades. And I still got to think about that a little bit, but
Well, yeah,
Some
absolutely. I mean, it makes sense because you're preferred. You have like you have bankruptcy proceeding rights to the Bitcoin. If you really wow, that's an interesting concept.
Well, he was also pointing out the change in the
Huh.
valuations when you look at lowering interest rates
Yeah,
and the valuation of the cash flows that come out of the preferred stock, right? So it's really good timing for them to release these at an 8%, if you think that rates are going to be coming down here for the foreseeable future, because that
Mhm.
8% just becomes more and more valuable. So in his eyes, it's almost like a home run to add into that type of a portfolio versus anything else that he was putting in there before. I'd have to look at what his prior breakdown was, but it's a very, very interesting product that I think sounds really boring to a lot of people until you get the nuance. I made the joke after Jeff, posted that people should read the post I put out before they put his, going, we always do what I call the 101 class on these. And then pretty soon Jeff's going to connect the dots to figure out how this strike IPO is going to impact the pricing of the spice markets in Istanbul, right? Like he's going to go like 5 layers down the path of inception here to figure out where all the impacts go. So I'm always fascinated to see what he comes out of when he's thinking about this for a while.
it's the butterfly effect. It's funny in Jeff's in Jeff's paper. I'm going to call it a paper. It's not a post. In Jeff's paper, he says usually the preferred equity is the armpit of the capital structure, and I've also heard that like most like companies that issue preferred equity generally do it when they're in trouble. And so this is a different scenario, right? Like this is a in strength, like MicroStrategy is issuing this preferred stock in strength to tap these liquidity pools. So yeah, it'll be interesting to see how it kind of all like flows through.
well, it's funny because like Sailor's, he's giving everybody the playbook, but he's also first to market. So now there's people doing the convertible bonds because their product was the best product ever. And then now he's like, oh, and by the way, now we're going to have the best preferred stock, and
Yeah.
and then there's just going to, people are going to play catch up with that. And by the time they catch up with that, I'm sure it'll be something else.
All right, you ready for this? Bitcoin backed preferred share ETF. Bitwise Pro Shares, I call it like that's mine. Give me a call, I'll help out. No, so I mean, we're going to see it, right? Just like we saw the Bitcoin backed convertible bond ETF. I mean, this is an absolute no brainer. You're going to see all of these companies are going to start doing this stuff too. It's going to be Semler's next, Metaplanet is next, right? Like they're all going to start doing it, and it's going to be lumped into a preferred Bitcoin backed bond ETF, and that's your Jeff Park 60/40 portfolios, having a diversified preferred stock ETF exposure to Bitcoin. That's going to change the game.
Well, people aren't considering the magnitude of the ecosystem that this is creating out there, right? So just think about all the connections to these products. So now you're a Bitcoin treasury company, right? Even if you just start there and you say, I'm just going to convert my treasury to Bitcoin, but you get above 1,000 Bitcoin. Now you've got dedicated ETFs with capital to flow into your equity just because you own 1,000 Bitcoin. You can get passive flows just for hitting that threshold. Now you go and say, well, maybe I want to go the leveraged route and I want to become a leveraged Bitcoin equity. Well, now you can go issue convertible debt. And now you've got ETFs that actually want to buy the bonds themselves. They're not just recreating the performance with swaps. I mean, they'll have to do some of that because they won't be able to get enough. And that's the point, is you're going to have these pools of capital out there that just want to buy your convertible bonds because that's what that fund does.
Right.
So now you don't even necessarily have to go negotiate the same types of terms you had to negotiate with the hedge funds. Now you've got this public ETF that just has capital sitting there that's earmarked for convertible bonds that are going to be used just to buy Bitcoin, right? That's how those are defined. So now you've got a customer, and it's going to be a group of customers, because there's not just going to be one convertible bond fund out there, that are all pooling this capital that are looking for a bunch of these convertible bonds. Well, how does that benefit MicroStrategy? Well, they're the only one with scale. They're the only ones offering enough of these to satisfy a lot of that demand. They're really the only ones that are up in the billions of dollars of issuing those debt instruments. And now you've got this fund that wants to buy them. Great. So now Jeff comes out and he launches his, Bitcoin preferred stock fund. So now you want to go, do an IPO and start up a new share class for your business. And you're wondering, well, who am I going to sell my preferred stock to? Well, you're going to sell it to Jeff in his new fund, right? And so you're creating this pool of low friction buyers out there that make it really easy to open and close these transactions at warp speed. Look at how fast MicroStrategy closes convertible bond offerings. Like, I don't think people appreciate quite how fast that is.
Yeah.
It's like,
Everybody's used to getting their Amazon packages in a day, so they're
Yeah.
like, it's convertible.
I mean, we're talking if
$2
it
billion.
takes, we're talking if it takes forever. It's a week between the day they announce it and the day it's fully closed and they're buying Bitcoin
Yeah.
and they've
Oh my
bought
God.
the Bitcoin already, right? A week. That's
Yeah.
crazy when you're raising $3 billion. It shouldn't be that fast, but that's how streamlined this has gotten. And because they've been doing those private placement, they've got the buyers out there, right? They've got the relationships already. So their speed to market with these products is really quick. And now the market's introducing even lower friction buyers for them. So now they're going to have relationships with all these ETF issuers, and they're just going to call them and go, how many of these can you buy? Right. And those ETF buyers aren't gamma traders. So now you can start to engineer the profile around your convertible bonds, because maybe you don't want to get slammed with shorts every time you go into a pricing period here by all these gamma traders, right? So now you can start tweaking that part of the formula here in the engineering model that they're putting out there. And it just creates this really robust ecosystem of all low friction relationships that you're picking up the phone and you're getting products out the door. And it makes it really easy for other companies to now come in and do this, because they don't have to worry about whether they've got buyers or not. It's pretty clear what the criteria are to participate and get those passive flows coming in and sell your bonds or whatever product or your preferred stock or whatever it is you're issuing to the market. People are underestimating the impact that has on these types of equities. I think it's pretty massive.
You hit on a few topics that I think are incredibly important there. The preferred buyers are also likely not arb traders. These people aren't going to be arbing. I mean, they aren't going to be arbing the premium. They're buying it for completely different reason. These are complementary
long
buyers.
only.
They're not the same buyer. Like a convertible debt buyer and a preferred buyer, they're not the same buyer. These are complementary, different pools of capital. And so when MicroStrategy raises this money, you're not going to see this like instant pressure from the convertible arb buyers that are shorting the stock instantly, that are pushing the stock price down. So, I mean, not only is it more accretive for Bitcoin per share, you also have no short pressure instantly from, trying to delta hedge the position of the convertible debt. So we haven't hit on that yet. I think that was a big one. Somebody also asked about the size and scale of the market. So the preferred share market, I just looked it up, is $1.3 trillion. So I think it's roughly the same size as the convertible debt market. But but I think it's what's really appealing to me in this whole thing is that these products are going to eat traditional finance from the inside out, and they're going to perform incredibly well. The convertible debt's performed incredibly well. So like, what do you do with it if you just, whooped everybody's ass in the entire convertible debt landscape? You sign up to do it again. You don't walk away. So the capital is going to come back to the well, and there are funds that are going to be looking for both that convertible debt and the preferred exposure, especially if it performs incredibly well and outperforms everything else in the market. So, and so these, like, while they're $1 trillion today, I mean, these pools of capital are going to grow because you're better off parking capital in these locations than, traditional debt markets, like buying, Sherwin-Williams 9% bond, right? Like just a 9% traditional bond. Like, no, I'm not buying it. I
You got to be careful, Jeff. You're picking a fight with big paint, and people are going to be throwing cans of Sherwin-Williams paint on you if they catch you walking in the street here. You're playing a dangerous game, my friend.
Big paint. Oh my God. Yeah. So Adrian, I think Adrian's still getting better from a cold, and I think we wanted to hit on a couple of things. So maybe we'll shift gears. We'll pass it over to Adrian real quick so you can jump off and get your meds going. And
Pneumonia. And I know Ben and I wanted to touch on Semler.
Good Lord.
Ben, if you want to kick it off.
Yeah, and we don't have to go real deep into Semler, and I know your meds are dropping off, so this is probably going to get rough for you to do a lot of talking here. But Semler was a little interesting. I think people, including myself, and I posted out as much, were a little caught off guard by the pricing of the Semler offering initially, with it being a fairly high coupon rate at 4.25%. I believe 4.25%, and they did upsize the offering, so they upsized it from 75 million to 85 million. And it closed at 100, which included the $15 million option getting fully exercised by everyone. So now Semler's got another one out. They closed it yesterday. I was a little surprised that we didn't see any announcements about them closing it, but it did close yesterday. The 8Ks were released. So I would believe that they're probably out there, buying Bitcoin. If they haven't already, we'll probably see an announcement from them. But the interesting part to the Semler one is they added a different piece to the structure, which is they essentially bought call options on themselves. And I thought that was a really interesting approach to take. And they were doing it basically saying that it would offset any dilution that was going to come from the conversion of the convertible bonds. And I don't think it fully offsets it, but it would minimize it. And I pulled up the indenture, and then they had an exhibit there that had kind of the structure of those options, but none of the actual data was filled in yet. So it was just kind of like a blank template that they've got to execute on here. But what I'm going to be curious is, it looked like the premium that they were paying for these was about 6.5 million out of that 100 million. So they're really, after all the fees and everything for doing this one, which the first one's always a little expensive, I think they end up with like 90 million to actually buy Bitcoin with out of this. But what I really want to get my hands on is the end structure of those options and start modeling out what it is they're going to do with that. Because it's a capped call option at $107.01, something in that range.
Are they buying it from the open market, or is
no, it's a private. It's a private. Yep.
Somebody's offering them a private placement call option.
Yep. Someone's structuring a call option on their company for them. Yep.
Is that that's a bearish position? Somebody's taking the bearish
Somebody
side of
sold
that
them a call.
Yeah. Someone sold them a call. So what I'm wondering is how they're which is why I'm hoping that they put out a press release or something, or maybe they'll talk about it in their next earnings, and maybe Adrian's already talked to him about it. But what I'm wondering is how they intend to use that. So either you just capture the value and you keep it on the balance sheet and you say, well, yes, there was dilution, but we got this offsetting value that came out of this capped call option that we had that puts additional value on the balance sheet, which offsets the impact of the dilution overall. Or do they take the proceeds of that call option and basically buy back shares at the same time that the convertible shares are getting issued out into the market to reduce the outstanding number of shares that are going to be there once it converts? I don't know the answer to that, but it's a really interesting structure to figure out what it does to the overall, I'm going to say, profitability of the transaction, but that's not the right word that I'm looking for. But how accretive it ends up making this transaction when all that activity is netted out in the end. And I'm sure a lot of it, depends on where the share price is going to go, but it's a fascinating structure that I've not wrapped my head around yet, and I haven't had a ton of time to dive into it. So maybe Adrian has a little bit more. Maybe I missed something in the high level overview here, but I'll be curious what his thoughts are.
Yeah, so I'm going to try to get through this without coughing up a lung. But so I haven't reached out to Eric and Renee yet. I think they're going to be on with Block Fuel here in a few weeks. I don't think Eric is available, but I think Renee is. Their earnings are coming up. So I'm going to give a high level overview of what I think is going on. I think Semler is trying to do their best to get over a sort of, I don't even know how to phrase it, to be honest with you. The way they're going about it initially confused me. It really did. I didn't quite get what they were trying to accomplish. I do think that because of their size and because they're newer to the market, newer to this approach, the market is placing some sort of a handicap on them, that they're having to get more creative in the ways that they go about running the Sailor playbook. So I know that's part of it. I know their size is something that's working against them initially. I know that their options market isn't as obviously isn't as large or anywhere near as robust as MicroStrategy if you take it at scale. I know that they are definitely having a few unknowns in the future. So they got QuantumFlow, they have a few FDA things coming through the pipeline. There's a lot of different moving parts with Semler that are just completely divorced from what we're seeing with MicroStrategy. That's probably caused them to be more creative in how they're going about things. I haven't wrapped my head around this latest offering, just because, one, I've been sick and I haven't read into it, and two, I'm having a hard time wrapping my head around what the end game with it is. Long term, I'm still very bullish on Semler, but this new offering did kind of throw me for a loop. So I want to make sure, before I say anything that can be seen as too bullish or too bearish, I want to wrap my head around it. What I do know is that they are, as an organization, they don't just take flyers. So they've got a long-term plan with this. They've clearly got some kind of a longer-term view that I'm just not quite seeing yet. So, long story short, I want to see a press release. I want to see some kind of a more comprehensive breakdown from them as to what this really entails before I go just spouting off as what I think it means.
Yeah.
We have to be very careful what we say. We don't want to.
And Richard Byworth basically said the same thing. He basically said, look, the market's not going to treat them as favorably yet because their scale isn't there. The liquidity's not there for all the gamma traders yet. And so they've got some handicaps that are holding them back in terms of the pricing structure that they could get, which might be why they're getting more creative here, right? This could be them engineering a similar outcome to what MicroStrategy achieves, but they just have to do it by adding in a few other vehicles to this to juice what they've got going on, because their premium was only like 25% or something like that in the for the initial convertible bond. So maybe the math, if you work out what they stand to gain on that capped call, maybe it pushes them more into the realm of what MicroStrategy is getting out of theirs, and it boosts that premium up higher. I don't know. So Mason was laughing there, and it was because I told him that when the lights turned off in there and I heard all the rattling of the chairs, it sounded like he was getting jumped by MicroStrategy bears in the room there. So that was why I was laughing.
Yeah, if my lights go off, it's motion sensor. I need to move around a little bit.
That's funny.
Yeah,
Be careful.
Semler, I do think that they're playing a bit of they do have a bit of a handicap that the market's placing on them because of their size. This goes all the way back to the SEC filings, right? Eric was saying that they had to jump through all kinds of hoops to even get their S3 through. So to Ben's point and to Richard's point, they could be trying to get more creative and find ways to juice the trade. So we'll see how it plays out.
Think about the scale, right? So they just raised $85 million, right? They have a $500 million market cap. That's 17% of their market cap. If you were to do the same trade for MicroStrategy right now and raise 17% of your market cap in convertible debt, it'd be $15 billion of convertible debt. That would wipe out like
20% because they raised 100 million.
okay, 20%. So you're talking about, $18 million of convertible debt, which wipes out the entirety of the 21 capital plan, the remaining convertible debt. So like the scale is just is different.
That is a good way to look at it. That's a really interesting way to look at it. It is massive at that scale. And they're going to be interesting to follow. I mean, we'll probably talk about them a lot more because they're really the first one out here running the full Sailor playbook. I mean, Metaplanet is, but they're doing it within the Japanese market, which has a lot of different nuances to the American market. So, they're doing things like, warrants and other stuff over there. But Semler's the first one we're seeing coming out of the gate doing the full leveraged approach using the convertible products. I know Marathon and all those, but outside of the Bitcoin industry.
Of all the companies right now, I think Semler's going to follow the Sailor playbook most true. I think they're just going to do it at their own scale. So that's why I have been following them closely. That's why I invest, and that's why the conversations I've had with Eric have given me a lot of confidence in what they're doing. It's just that this latest move was, I didn't see it coming, and I'm not as savvy as others when it comes to some of these financial engineering plays, but I just want to make sure that I have a full grasp of it. I do think that based on what I know of the company, their history, the conversations with Eric, conversations with Renee, they're not going to do something that they haven't really sussed out to the bones. So I'm not concerned. I just want to make sure that I'm informed.
Yeah. And the coupons are nothing for them, right? Because they've got 20 to 25 million in free cash flow, and this is going to take 4.25 of that. And that's if they don't get any of this upside from getting the heart dysfunction approved for QuantaFlow in Q1. So there's a lot of
no means in danger.
No. This is very conservative within there. Like you see the 4.25 coupon, you go, oh my gosh, that's got a lot of cash flow requirements along with it, but not really, not for how their business performs. They're still pretty strong there. So it's not really an issue.
I think it's helpful to talk about these products because, or how these companies are doing this, because there's creativity and happening all across financial markets for all of these companies. I mean, I think you mentioned Metaplanet, and this statistic is pretty crazy. They had issued 21 million moving strike warrants at a 0% discount and raised $750 million. I don't know the exact statistics of like how much Bitcoin they currently hold, but that just blows it out of the water.
It's like just over 2,000. Yeah. And they'll buy 7,000 with this, I think.
Yeah. So like 4X's the amount of Bitcoin that they have from this single capital raise. And it's the largest BTC capital raise in Asian public equity market history. Well, I think that makes sense. The largest BTC capital raise. But I mean, that's a huge capital raise regardless, like $750 million. Not yen, $750 million. That's a really big capital raise to go buy Bitcoin from a company that was previously owned a single hotel, I think.
I think the company has like 12 employees or 10 employees or something, right? I mean, like it's very small and they're killing it.
They're just absolutely ripping it.
7,000, and that's the start. They said that they were targeting 10,000 for this year, but if this 750 million is even remotely successful, I'm betting that they do something much bigger than 10,000 this year.
Oh my God. Can you imagine?
That's another pretty good sized buy coming into the market.
Can you imagine sitting around the board meeting when they first decided to buy Bitcoin? They're like, "We just got this hotel. We got to do something else."
Well, and they're unique because the Japanese market's really unique, and the problem that they had there with the yen, right, was a big accelerant for their strategy. I think you saw a huge amount of demand in the Japanese market to get exposure to something like Bitcoin, and they did it through Metaplanet. So they had this really significant buying base there. And so their performance has just been astronomical. I mean, it's been incredible, the run that they've been on. So it's, you want to see more of those popping up in all the different markets around the world, right?
Mm-hmm.
You look at them as the Japanese MicroStrategy. So Dylan, Simon, I mean, those guys are killing it over there.
Shout out. Yeah. Shout out Dylan and Simon. Absolutely killing it. What else do we want to hit on? We hit Strike. We hit different companies. We got the Battlefront.
All right, guys.
Adrian, you gonna drop?
Yeah.
Oh, Jesus, feel better, man.
We need you back,
Enjoy the
man. There's a lot of
conversation,
bear
guys.
fud to fight.
Yeah.
We need you back.
Yeah, next
Quantum
week.
computing's going to come. There's going to be deep sea quantum's going to come. We're going to
Oh
need you.
God, yeah.
Yeah.
Don't worry,
Right.
I'll be back. I'll be back to it. I still just need a little bit more more time.
Ponzi bears,
Yeah,
pyramid scheme bears, every.
I love
every
that we're
form.
back to recycling Ponzi again. Like they just keep running out of
That was
arguments,
so
and we just
annoying.
start recycling the old ones again.
That was so annoying. It's like, dude, you're talking about something that you clearly haven't researched, and you're recycling someone else's video. Like let's get it together.
Yeah,
I
that's why
expect
stayed out of it.
better from our bears.
You're telling me 23-year-old corn farmers know how capital markets work?
Yeah, I was shocked personally, but yeah. All right, guys. Later.
All right, later,
See you,
Adrian.
See, Adrian.
Okay, what else we have? Man, there's so many things to talk about. Fed interest
Did we already
rates.
talk about? Did we already talk about Jerome Powell today? Talking about.
Let's talk about Jerome Powell.
I
Tim,
tried,
you wanna-
man, but
I-
I dogpiled
we-
on that
We
one.
had,
bad,
we
my
had
bad.
to. We had
We
to
run
hit
the
it.
tight ship
I
over here,
won't-
and we
yeah,
got
let it-
off track. So
Let it
we had
go.
to,
Let it go. Go ahead. Go ahead. Talk
I
about the
think
Fed.
quote, yeah, quote, we think banks are able to serve customers as long as they manage the risks, referring to Bitcoin and crypto. So that's and I think Jeff Park again had some post shortly after that was like a lot of institutions are like, we can't do it, and then you just have Jay Powell coming right out the presser like, banks can do it. So I'm sure there's just bewilderment and just a lot of like, we were in winter from a regulatory standpoint, now we're in spring, like we're sprinting towards summer, and like outside of the people on this call, like no one realizes it. So it's just a really interesting time.
well, and
He
then
said-
one other thing he said is he said, our role in Bitcoin is to look at the banks. If you're making the choice to conduct that activity inside a bank, then you want to be very sure it's safe and sound activity. We're not against innovation. So that was a pretty,
We're not against innovation.
we're not against innovation.
We're
so-
not against innovation,
like
even if
capitulation
it
if
makes
I've ever
us out
heard
of a job, right?
Yeah.
Even if it gets rid of the Fed.
He started off by saying Bitcoin and then corrected himself, and said crypto, right? So, you have to imagine that man's pretty particular with his words, or should be at least. I just thought it was interesting.
Well, yeah, I mean, totally focused on words. Literally every single word that man says, people are trading on.
hmm His
Algorithms,
tone.
his tone. And I posted about that, and just to see what people thought. I think it was something like 50% of people think that trading algos trade on intonation. So like the tone of his voice. And that's just a crazy concept. And if they're trading on Powell's voice, that means they're trading on CEOs' voices. They're trading on, judgments, earnings call intonation, all of this other stuff. Like if that's happening there, it's happening, everywhere on all equities. So it's kind of a pervasive topic once you start to kind of unravel it a little bit.
Jeff, I know you listen to Jerome, but I don't think you hear Jerome.
Yeah. That's fair. Okay. That's fair. It was really interesting to also watch the market's reaction, because Powell was hawkish, and we're not seeing an interest rate movement, right? Yeah. No interest rate movement. And I think it's just kind of a pause. And the comments on inflation were, I don't remember exactly what he said, but it was, the words he picked around inflation wasn't that inflation was back, or, it just seemed like they're just taking a pause. And you look at how it impacted the markets, and it's really hard for me to conceptualize with Bitcoin, because Bitcoin is equally a risk-off asset and a risk-on asset. It's kind of correlated to tech stocks, but it's also the risk-off asset if there's fear in the markets, right? Like if there's fear in the markets about inflation, people look for hard assets. They look for, real estate, homes, gold, and, other hard assets like Bitcoin. Whereas, shit coins and altcoins, those aren't hard assets. Those are risk on assets, because they have like their framework isn't proven, and they're the result of more work that needs to be done. They're far more speculative than a proof of work asset that's limited in supply and without an issuer. Like they're just fundamentally different products. So it's interesting to conceptualize how the market reacts to inflation for an asset that fits both categories of risk on and risk off. And then you think about an asset like MicroStrategy, which is the risk on of the risk on and off asset. So it's interesting.
Well, one thing to comment there, I think is interesting. Ray Dalio recently, his rhetoric in Davos. He's releasing a new book about debt spirals and kind of the end of nations. At least that's kind of what I glean from it.
Great read.
But
really exciting read.
He was talking, in Ray Dalio's mind, he was talking about alternative monies, referencing gold and Bitcoin. And for him, very successful investor, highly respected, it's risk off. So I think it just depends on, for me, it's risk off. I know for many of us, Ben's talked about it extensively. It's the most peaceful part of his portfolio, right? So it really just depends, who's managing the capital and how familiar they are with Bitcoin and largely the broader macroeconomic situation of the world.
Yeah. I mean, I'm about to go try to convince insurance companies that Bitcoin is a risk-off asset, that they need to have exposure to it. If you don't have any exposure to it, your exposure to long tail liabilities is going to destroy your company. So yeah, it's man, it'll be interesting to see how that all plays out.
Going back to what you said, Mason, about the Fed basically kind of saying, yeah, we're cool with Bitcoin, but it's going to end up putting them out of a job. And there's no way they go quietly. It just reminds me of the way that Jeff Booth talks about the system has to, they can't really defeat Bitcoin at the base layer. So he thinks that they will attack on layer 2. So it just reminds me of Ripple trying to go in and sabotage the strategic Bitcoin reserve. And the other one that Jeff talks about is they'll probably try to manipulate Bitcoin ownership with like stable coins or something, like get everybody using Tether or something instead of actually custodying their own Bitcoin. So I don't think the Fed's going down without a fight. They've got something in the works.
Yeah, I mean, definitely. If the way that you have developed and earned money for all of history forever, if that's threatened, like you don't go quietly. You absolutely don't go quietly. But yeah, it's I don't know. I think all this stuff takes a little bit of time. It just kind of depends on how quickly this game theory potentially intensifies with, nation states and corporations adopting. If it gets crazy in 25, or if companies just start dipping their toes in the water, this could be more of an issue in 27, 28. Or I think if we started to see an inflationary period again, which is possible. For many reasons, many things systemically that are happening in society today. I think there are going to be many people that are looking for risk-off assets in alternative ways. And, I was talking with Danny Knowles earlier today on what Bitcoin did, just about the insurance marketplace in California. And like thinking about real estate in California, like all of these people that hold a $20 million home in Beverly Hills, is your $20 million home worth $20 million? Like, do you live in the house? So do you have utility from it? 2, like, are you just holding that asset to hold the asset to store value there? If so, like, if you're not able to get insurance, are you willing to like self-insure your $20 million home if it burns down? Two, then all of a sudden, like, does that impact the value of the home? So is that $20 million home now only worth like maybe $10 million because like you literally, the market just doesn't exist. Like you can't even insure it. And so everybody starts to rethink, the market, like reevaluate the risk return metrics of these other risk off assets that they own, like real estate, and, search for alternatives. Because I think a lot of those Beverly Hills homes aren't everyday homes, which is another weird thing about a lot of those places.
Now, did I see you post that the damage in California was something like $50 billion?
Yeah. It's
Now,
yeah.
I'm going to tie it back to MicroStrategy because MicroStrategy owns just under $50 billion of Bitcoin for scale.
Yeah. MicroStrategy owns.
Comparison point.
Yeah. So the total loss is estimated to be $50 billion. Oh, I like this. Actually, I posted on this too. Right. So this loss is estimated to be about $50 billion in California. MicroStrategy owns about $50 billion of Bitcoin. To put that into scale of the reinsurance market, $50 billion held of Bitcoin would make MicroStrategy the fourth largest global reinsurer in the entire market, behind Berkshire Hathaway, Chubb, and all of Lloyd's of London.
Wow.
Yeah. They'd be the fourth largest, just comparing assets, like assets held of these reinsurance companies. So when the price of Bitcoin doubles and goes to 200,000, MicroStrategy could theoretically, I mean, it's the market isn't evolved enough for this, but the MicroStrategy could theoretically put half of their Bitcoin at risk and be the fourth largest reinsurance entity on the planet.
Which is a good thing to talk about, because one thing I think a lot of people that invest in this space overlook is the fact that any good company is in a constant state of transformation. And so there's a reason why, like, people keep pointing out to me like, well, it's going to keep getting more expensive to, increment and build Bitcoin yield. And doesn't that bother you? And my answer is no, it really doesn't. And the reason why it doesn't is because I view MicroStrategy as one of those companies that's in that constant state of transformation. And this is the current strategy moving them along that trajectory. So when you look at things like running an LBE strategy, you got to think down to the core of what are they doing, right? It's the active accumulation of capital. They're using the capital markets to create this massively capitalized organization. So people like to bring up, well, what happens if all the demand dries up for the convertible bond market and nobody wants to buy any new products? And the first thing I look at is all right, well, let's talk worst case scenario. Let's say by that time they own 800,000 Bitcoin and Bitcoin's at 300,000 a coin. So, all right, they've got $240 billion of Bitcoin. How many companies on the S&P 500 list have market caps above 240 billion? Jeff, you might know that.
Yeah, there's like 14.
Yeah, exactly. So the answer is, what do they do then? The answer is whatever they want. They've got $240 billion of capital. Like, this is a way to build for the future, right? That's essentially
upgrade the world.
Yeah. Like, you're using the capital markets and you're using the desire for the markets to have this universally tradable asset. And you're the first one to come to the market, securitizing Bitcoin for all these different pools of capital. And because of that, you've got a massive lead in the acquisition of capital that can be deployed in the future for whatever it is that you want to transform into. So any good company is always looking at themselves being in a constant state of change. And the KPIs that you put out as an organization show where you want investors to focus on your outcomes as being successful, but it also focuses the efforts of your management team in how they focus on all the transactions that organization undertakes and how they're going to measure whether they were successful or not. And in the end, if you look at MicroStrategy 5 years down the road, 10 years down the road, you have to start thinking, less in terms of, well, what's the Bitcoin yield going to look like in a decade, and more in terms of if Bitcoin's maturing as an asset in our financial markets and it's going to start getting ingrained into our financial system. If you've got capital like that, that's easy to tap into, what are they going to be able to do?
Right.
And my answer to that is whatever they want.
Anything
They're
they
going to
want.
have so much capital available to become whatever it is they want to become. So it doesn't really bother me when I look at those things, because that's how I view strategies. I view them as long-term outlooks. Most people are looking at this in this silo that's, time boxed in like a 3-month to a year time frame. And that's very short-sighted when you look at a company like this, because I think that this strategy is much bigger. And this is the biggest way to create an advantage for your organization that I can think of right now. What other way can any of these companies go out and accumulate more capital in that period of time, unencumbered capital in that period of time? Yeah. Right. I can't think of a better strategy.
No.
Particularly from where they started. You got to think about where this company started
$1 billion.
4 years ago.
Yeah.
They were $1.5 billion company and they had what, $500 million of cash? Like that was the starting point. 4 years later, they have $50 billion of Bitcoin with $6.5 billion of debt against it right now.
Yeah.
So that is a massive growth in the capital that this organization holds. And if other companies don't view that as a strategic advantage that they could deploy within their own sector and say, well, if I've got a strong company that's strong cash flowing and I'm the right size where I can deploy something like this, this is probably my best competitive advantage to deploy against all my competitors. If this is the only difference between our companies and I've got 5 other key competitors, look at the growth MicroStrategy had. If they go on the active strategy of accumulating capital, go 5 years out. What power would you hold within your own sector just because of how much capital you hold? Huge, right? You might consolidate that sector yourself into one, right? Create your own monopoly. So I just think it's a really interesting strategy that people aren't giving enough credit for in terms of what it looks like in 5 to 10 years, because we're still trying to digest what it means for the stock price today. But I look at that and go, the biggest win on this stock price might be then. Right? We might get great gains now, but the big one might come whenever that next phase of the transformation happens. I mean, it's a ride. So I'll stop there.
It's going higher.
No, I was just going to ask, when are these companies going to wake up? Like, in your opinion, like how extreme does this need to get before
when they have
companies
to
start to realize this?
When it becomes a survival thing, right? But the problem is it's going to happen all at once, because now when you look at it that way, say that, I'm not even going to pick a specific sector, but just say that you're one company in a sector of, 10 companies that are competing in the same business line. One of your competitors goes and adopts a Bitcoin treasury strategy. If you're any of those other companies, you would need to really look at what advantage that might provide to that company. And then you have to start thinking as an executive team, how do we mitigate that risk to our business? Right? If we fall behind and they're generating more capital through all these other activities, because keep in mind, setting up a leveraged Bitcoin equity is essentially creating a separate business vertical within your organization. That used to be a dormant back office function, right? I'm not even sure the people working in treasury departments got windows in their offices, right? Like, I think you were just in the back. No one ever heard from you. And MicroStrategy was the first time that said, we think that this organization can be a value creative organization for us, right? And they've proven that thesis out. So if I'm in that sector where now one of my close competitors goes and starts deploying this strategy, I've got to take a real close look at that, because I might have to just even become a defensive buyer just to mitigate the scale of the advantage that they might build against me. Right? That's how you have to think about it. If you're an executive, you're looking at the survival of your company within a sector, because there's always consolidation in sectors, right? There always is. So you're looking at, are we going to dominate or are we going to shrink and lose our influence here? And if one of your companies that you're competing with introduces this new business model that has nothing to do with your core business, you got to look at that and go, what do they see here? And what's the advantage to this? And the use case that you go to look at is going to be MicroStrategy when you try to figure out what does this look like. So I think that it becomes this rush of activity at some point here. as more companies are adopting this, because the pace that we're seeing Bitcoin treasury companies popping up now is accelerating. We're seeing announcements come out pretty regularly now.
It's going to be super exciting in public markets and private markets. So a couple of things that come to mind is like Live Golf versus PGA Tour. And if PGA Tour, puts Bitcoin on a balance sheet, like, okay, maybe they can start to wrestle back, all the players from Live Golf, all of the Saudi cash. Or you start thinking about like, I don't know, like Nike versus Adidas, or, some, like you said, with somebody with competing interests, you've got two competitors, and you've got one company starts catching you or running away from you really quickly. Like, how do you keep up? You've got to figure out what they're doing, like, financially. It'll be interesting to see if this comes into private markets the same, like the sports world. Because, I mean, professional athletes getting paid in Bitcoin are starting to think about even individual sports teams, right? Like Seattle Mariners, like if they put Bitcoin on balance sheet, maybe they'll actually buy a good like power hitter to go along with Julio Rodriguez, right? Like, I don't know, it just gives you more financial flexibility, and all of a sudden you might see these like companies in different formats, like using and leveraging Bitcoin in different ways that we haven't seen before. Yeah, that's an interesting thought. Geez, the biggest game theory experiment of all time, Bitcoin, infiltrating every single market on the planet, and eating traditional finance from the inside out. Yeah,
and it's happening so fast, right? And it's only getting faster. That's what's mind blowing. Like Jeff, when I was talking to you recently, we were talking about last January and how, the past year, 2024, was very illuminating for MicroStrategy's treasury strategy and what kind of company they are.
Yeah.
Pre ETF in January, or like the first week of January, this was all very uncertain. We didn't really know whether or not MicroStrategy, it was still a question of whether or not MicroStrategy will be a viable company in the future. At least that was the larger conversation happening in the space.
Yeah, it's evolved so quickly. I mean, and it's turned into strength, right? It was uncertainty, and it's turned into strength. And political regime, just like the road is just literally wide open. There's no roadblocks in front of you. It's like you can think it, you could design it, let it rip. Yeah.
I even think back to, Jack Mallers had a good quote when he was talking about how he owns no fiat currency. He lives his life on an entire Bitcoin standard. And his quote was, "Everything around me just gets cheaper." Well, think about that as a company where all your supplies and everything continually get more and more expensive. If you think about it that way, when you convert a treasury over to Bitcoin, you can inject that as a reality into your business as well, right? Because you're preserving that value. Everything around you keeps getting cheaper, while for all your competitors, it keeps getting more expensive. So it's an interesting way to change the way that you think about your business, even running your core business. But I think that, there's going to be some companies that are caught sleeping at the wheel here. And when the other ones move fast, they're going to get left behind.
Yeah, the number of companies putting Bitcoin on their balance sheet has to have accelerated, right, in 2024. But like the acceleration is probably accelerating. I would think at this point.
The second derivative, the rate of change of the rate of change. Hell yeah.
I knew you'd feel that one in your soul, Jeff.
Just pump it into my veins, dude. I love the second derivative. The rate of change of the rate of change. It's true. I think it's true. I think we are accelerating faster. I mean, that's just mathematically how it will happen. And it's this adoption curve, right? Like it's the growth rate of trees. Like you have this S curve of adoption, and you'll hit a peak at some point until you're 100% of the way there. So yeah, completely agree.
The number of metaphors is accelerating.
Yeah. Yeah. That is also accelerating. Okay. So we're at an hour 54. I think it's probably worth starting to wrap up a bit. Maybe we'll go final thoughts around the board. And maybe we'll start with Ben. Final thoughts?
I think I've given plenty of thought, so I think I'm good. I'll pass my
Well, that's-
time to someone else.
Boom.
now.
Soleil, over to you.
Yeah, I'm still geeking out about Semler buying calls
Call
on
option.
themselves.
I knew that'd be right up your alley.
That's like a big swinging option moment right there. That's like I think it reminds me of the story. I can't remember which pod I heard it on, but they were saying that it was either Munger or Buffett was talking to like Steve Jobs or something when Jobs wasn't sure if he should buy back shares in his own company, and Buffett was like, well, do you think your company's worth more than it's trading for right now? And he's like, yeah. And he's like, then buy it. But Semler's like, hold my beer. I'm going to buy calls.
I'm going to buy calls on it.
You know, like shares. Who buys shares? I'll buy calls. Like that's
baller. That's totally
yeah.
baller.
I can't stop thinking about it.
It's
freaking
like
me out a little
this is kind of like Josh Mandel's idea, which he's been trying to pitch to Sailor. I think he's been like trying to figure out a way in. Is that any of the ATM that MicroStrategy uses, instead of buying Bitcoin, you should buy in the money calls on IBIT or something like that, just like slightly leveraged, and then at expiration deliver them and use ATM to exercise all of them, just to like push the leverage even further. But that adds a whole nother risk vector.
Someone will try it, man.
That is a
Someone will
whole
try it.
nother risk vector. And maybe it's similar, maybe it's Metaplanet.
That'll be the next product.
Yeah, just somebody's figuring out how to do it. Yeah, that'll be fun. Yeah, Soleil, anything you find out, like, please share. Also, we are really looking forward to seeing how you do against MSDY, or Misty, as the people call it.
Yeah, I got a counterpunch.
Counter punch. Okay, hit him. I know you got different risk return metrics, so yeah, keep us in the loop.
Yep, I'm
Okay.
psyched about Jeff Park's product as well. And if it's better than MSTY, I'll just dump MSTY and trade against a real opponent.
I guess to that point, there are many products that are going to come out to market in 2025 that will imitate and do alternative things. So keep your eyes open for other products that come out to market that may be structured slightly different or provide different risk return metrics. We're only at the beginning. I mean, the rate of change of new ETFs is accelerating, right? We are just beginning, just taking off. Cool. Over to you, Tim. Final thoughts?
Yeah. So we're talking about all of these new products, but the one post that got my attention today from Andrew, AP Abacus, for anyone that follows him, he said, update, expecting additional. Now we're just talking about the original ETFs now, the original Bitcoin spot ETFs, right? He said, expecting additional Bitcoin ETF approvals at multiple wealth management firms by the end of Q1. Names of note that will broaden availability include Wells Fargo, Stifel, Raymond James, UBS. Then you had Ryan Rasmussen saying, just wrapped up a crypto presentation to 700 plus financial advisors from Wells Fargo, JP Morgan, and similar firms. I mean, I know I say it all the time, but it still blows my mind that like some Americans can't even buy the Bitcoin ETF because of the brokerage house they're with. I mean, that just seems silly.
That was me. I just pulled all my stuff out of Merrill because they wouldn't open up any of the Bitcoin stuff. So it's amazing how far we are down the path, and some of these are still fighting it. Yeah.
A year.
Yeah.
The craziest part of that whole thing is you just missed out on a year of fees on the best performing asset ETF on the planet in history. Like, go tell your board that you're fired. Oh my God, get out of here. Like you're fired, right? Like, what are you doing? You missed the best performing fee environment of the last history forever. Oh my God.
Yeah.
Cool.
And then
that's bullish Bitcoin.
Yeah. And then I don't know if everybody saw sometime recently, I just saw it today, the White House is welcoming independent journalists, podcasters, social media influencers,
Oh,
and
yeah?
content creators to apply for credentials to cover this White House. So I applied. I think everybody should apply.
Yes,
I think
yes,
we
you
should have
did.
MSTR
Hell
True
yes.
North in the press room. So.
Oh my God. Would you have to move to DC? I think you would. Whoa.
Well, I guess if you have a credential, maybe you can just kind of be there. Sometimes I have no idea.
Wow. Oh my gosh.
I think if you get in that room, Tim, every time you're in there, you need to add one more piece of orange until you're just full
Just-
orange suit,
yeah.
or like you just stand out in the crowd. You're just gonna slowly
like Dumb and
morph
Dumber,
while you're there.
like the orange top hat. He's got an
Yep.
orange cane, orange
exactly.
suit, orange tie.
Yep.
Pulls up in an orange Lamborghini.
Be undeniable, Tim.
Mr. President, Mr. President.
But what do you think about Bitcoin?
Yeah. Oh my gosh, that would be epic. I mean, wow, that would be really cool. I would love to see some Bitcoin or crypto. I mean, there makes sense to have some crypto representation in the room. It'll be interesting to see who they pick. Cool. Is the application long? like a
No,
big-
you literally you literally put in your first name, your last name, your phone number, and your
Your
main
Twitter
social
profile.
media profile link, and hit submit.
Oh wow. Okay. Yeah. So are you cool enough? Got it.
So all of Bitcoin Twitter is going to be submitting them
Just-
now.
Yes, you just go do it.
Yeah.
Okay, White House, whitehouse.gov. Okay, thanks, Tim. Thanks for sharing. That's a very bullish hire news. Yes, thank you. Cool. Over to you, Mason. Any last thoughts?
Yeah, I have a few. And I have a few pieces of advice, which you can take at your own discretion.
From the sage
yeah, from a
Mason.
from a 22-year-old. Number one, draw it out. If you're ever confused about something, what really helps me is visualizing it, putting it on paper. Even take this episode, take what Ben has written about, spoken about, and draw it out. That will really help you visualize it and kind of understand it in a deeper way. That's helped me, throughout understanding MicroStrategy, whether it's, the convertibles, the ATM, all of that, draw it out. Number two is focus your energy. That's the sailor one. But right now we're, it kind of feels like we're in the doldrums of the volatility. And there's a lot of people who kind of have these very myopic perspective and time frames when it comes to MicroStrategy, and they put out a lot of noise. And don't listen to them. Focus on the bigger picture. Focus on understanding this trade better. Focus on understanding this company better, and reach out to people and make connections. And lastly, is when things eventually get crazy again, don't get greedy. And I think you have to think about that right now, because when it is crazy, you're going to be mentally everywhere. And I know that we've all experienced that. And I think in these moments when you are level, when the stock isn't going crazy, when Bitcoin's relatively, ranging, this is when you can make plans and think about how you want to act when volatility arises again. Because you want to have a plan, because this equity, this asset will play with your emotions. And that's something you really have to be wary of and thoughtful of. So take this time, do some journaling, draw it out, have some perspective, and don't listen to people with myopic opinions.
Pigs get fed, hogs get slaughtered. Excellent advice, Mason. Draw it out. I mean, everybody sees me writing. Like I'm always, taking notes, drawing things, having things to come back to, and it definitely helps. I also have a huge whiteboard over here on the wall. It's like, I don't know, 5 foot by 5 foot, and I just will go draw things out if it does make sense. So it's like such really good advice. Classic Mason coming in with some sage wisdom here at the end, just hammering it home. Okay. Wow. I almost don't want to say anything else, but I mean, to Mason's point, I like focus your energy, right? The reason we're having these conversations is this is a complicated trade. There's a lot going on. The battlefield is about to intensify. Like the next couple of quarters, when leverage gets put on the balance sheet, people are going to lose their minds, and we're going to see so much more activity from media, bears, people that are arguing on valuations and what the company should be valued at. And things are just going to get significantly crazier. And we've heard all of the bearish FUD already. So, I wouldn't be surprised if it just all gets recycled, 2 or 3 months from now, and we see all of the same things come up again. It's like, well, we've been making these arguments since, February of 2024, and everything is pretty much unchanged. There's just a couple new products where MicroStrategy can continue to leverage their strategy. So the battlefield is going to intensify. So sharpen up, get ready. And to Mason's point, prepare your perspectives on what the next couple of months may look like, and have some underlying plan on, what you hold and what you plan to trade and utilize in the future. It's really valuable. So with that, I know a few of us may be going to to MicroStrategy World in May. If you are looking for a discounted ticket, I know, Tim, you have a discount code on MicroStrategy World. Discount is capital KOTZ, right?
That's it. KOTZ.
KOTZ. Yep. Boom.
At checkout.
So
great.
And I think that's like a 20% discount on MicroStrategy World. And then we still have some funds from the merch website that we are planning to redistribute back into the community somehow. We're still working on that. I think that's going to be a February project, but February is right around the corner. So that's all I've got. Thank you, everyone. Appreciate the time. And we'll talk next week.